What is going on, guys? Welcome on into today's live stream, Monday, May 8th, starting a fresh new week here in the stock market. And what do we have? I'm going to take a look at SPY. And what we've got, if I go to the hourly chart here and auto adjust this chart, what we've got is a continuously range-bound market. Really, since the beginning of April, and here we are over a month later. So, well, it's gotten a little bit more interesting, as in bigger movements and more like a little bit more volatility as of late, yet the VIX is going down generally speaking, because we are just kind of shopping, but like in terms of like just more action up and down and less like very short, very small chop. It's still just, it's still range bound. So low end of SPY is around 403, 404, and then up to the higher ends like 415 to 418 or so, 417 or so. That's the spots, or those are the spots that we are currently watching. So it's been pretty choppy, obviously, as we've been saying, right, the past few weeks. But this week, in terms of what's on the radar, might as well just talk about this first. Not a ton of stuff early. We've got the Fed Senior Loan Survey. I think that's coming out. Actually, they postponed that to like after the close, if I'm not mistaken. Maybe there's a reaction to that. And then really Wednesday and Thursday are the inflation data. So it's CPI and PPI. On Wednesday, it's CPI in the morning, and then Thursday morning is PPI. So those will both come out in the morning prior to the open. So you'll have time to kind of like see what the market wants to do prior to the open and maybe gauge that. But yeah, it's not a lot going on, It's been just kind of chilling for now. So let's see what SPY does until the end of the day. Still just in this range. It's maybe trying to build a bull flag, maybe, if you want to call it that. But, really it's just in this consolidation after a decent move up on Thursday into Friday of last week. So see if it consolidates into this and maybe wants to push higher. Maybe. Big question mark. So we'll see. I currently have one open position, which is in NVIDIA, and I'm stopping out if we break down below this 9 or this yellow orange line. I got in from the break of this 290.60 area, which was, I believe, the high from a few days back. I go to the 1 hour chart, 4 hour chart. Yeah, was the highs from back on May 1st. So that's a new high of the year for NVIDIA, which is pretty crazy to think about, but it's been a beast. It's been a beast as of late. So maybe it'll stop me out here, but I'm up nicely, like 20% on the position for now. So we'll let it ride. If it wants to go for more, market's pulling a little bit right now, and either it's going to stop me or we'll hold it for more if it wants to get more. But it's all good. If it doesn't, we'll take the gains and move on, albeit small. What's going on, Flippa? Trade just didn't work out too well. Yeah, I had Tesla today. It didn't work out. I think there was some sort of news. Something went on a few hours ago, and market had this quick dip and then quickly got bought back up. So if I go to the 5-minute on SPY, it was this right here. I believe there was some bank-related news. So we had this big dip down, and then it snapped right back up. So I was in Tesla at that time, and what I was in was I was essentially playing, because Tesla's in this gap right here. It's filling this gap to the upside right now. This white box. Here's the daily chart on Tesla. And I'm looking for it to push up to 177. Once it gets there, then I'd prefer to be hands off, just let it do its thing. But it's got some room to fill that gap. So I figured, okay, a long trade here would not be a bad idea based off what we're seeing. I just didn't love, how he popped in pre-market and came down. So I wasn't like super, super confident, but I played the break over this like 172.10 area, and we got a nice little pop, and then we had that news, and it just got crushed right back down. So I stopped out as we started to break down towards a VWAP. So that was the L there. Looking back, is what it is. Wasn't the best setup, but also there's nothing you can do about news. The market all just kind of everything rug pulled at that same time. So the only thing you can do in those situations is just not get destroyed and not lose and hold and hold and hold and hope. Is just cut it and move on. You can come back if it kind of just if it's a quick blip. You can always get back in, but holding and hoping is where you get screwed, right? So I don't know. They're getting some SPY's chopping around now. SPY's getting some little jumpy action here. Those last not really jumpy, just pulling back to VWAP now. But yeah, it just seems kind of weird, the action we're kind of getting. Just continue, like this is like a pretty shitty day. Like if you think about that, like this is a pretty shitty day. Just like it's just chop, not really. And you had this like quick little dip, squeeze back up, new high, dip right back down. So you're not really getting like much. If this dip was bought up and then we squeezed into the close, that would just be trapping some shorts. But it's not really doing that in this case, in my view, if we're going to just come back down and just kind of do this into the close. Like if we just do that into the close, okay, then you just have a chop day and there's nothing you can really do about it. It is what it is. Greetings, PLNTR earnings. Oh, we can take a look at that. Hopefully we get the Palantir earnings after close. Yeah, we'll take a peek. If they got earnings after close, then we will take a peek and hopefully they'll drop them early. But yeah, Palantir, man, 725. Did well on NVOS. Bought some shares a week ago. 60%. Nice. Let's take a look at that chart. I don't have it, but look at that move. It's just doing its thing. Ultimately, yeah, that gap to like 60 cents is beautiful. That would be awesome. And maybe we'll get there one day on a spike or in pre-market or who knows. So never say never. But yeah, honestly, I mean, I think I played it once or twice in this past couple months, right? Classic move where you got this nice, base developing down here around 10 cents. And what you just kind of had was a couple of these little higher volume spikes and someone was loading it. And there's even a nice one right in here recently. And then it just built that base, held it for months. And then that curl began and you have a nice, from those lows, you're up 100%. So if you even got a piece in that, not at the lows, if you got in like somewhere in here, you're looking good. You just can let that kind of do its thing and lock some gains. Now you can hold it and stop loss down towards your break even or even 10 cents at this point and let it do its thing. So those are the best when it works out that nice. It doesn't always work out that nice, but those are the best. I've had a couple of those over the years, more than a couple, but I don't know. I haven't really been super interested in the small caps lately. There's charts like this out there. Don't get me wrong, but I just haven't been. I don't know. Haven't been super fired up for them. Let's see today. Today we got TRVN up 300%. That's cool. That's good to see. BLCM 150, OMH 100. So there's 3 stocks over 100% today on the day. ACOR, this is a stock that's been a pump and dump for years. That's up 78, 80%. All right, so there's maybe some good action here. Maybe. Let's see, looks like NVIDIA wants to maybe flag and send it here to the close. Trying to break out strat this week, found they would be work. The thing is, like, if we get a break of this range, whether it's up or down on SPY, I mean, those will work pretty good. They'll work pretty good. If we don't, it's going to be tougher because and that's what I strictly play. Not that it's better or worse than any other strategy. It's just a strategy. But there's a lot more that I'm realizing to kind of fine tune it that comes down to the context of the situation. And like, not every situation is the same. So you'll have some situations where the overall market is very choppy as of late, or you'll have SPY going up, you'll have Apple going down, NVIDIA going up, AMD down, Tesla up, Microsoft up. And so you're like, okay, everything is all over the place, all the big names. Like, yeah, you can still find the good, maybe, you pick on and hone in on one and the chart setup and whatnot, and that could work, sometimes, but not all the time. And I found that you're going to have a much higher probability of that success when things are aligned, and when you have better alignment across the overall market, A, and then stocks in the same sector, B, and then stocks that, make up SPY in a big way and move the markets in a big way, C, if you want to call it that. And that's not like super revolutionary in terms of an idea, but that's kind of what I've just been finding. And it's just, through trial and error and seeing it, and then just being able to kind of step back. You're going to see a lot of super great setups over the course of time, but being able to step back and just like wait for when things align better. They're never going to be, it's not always going to be perfect. And most time it isn't going to be perfect, If you wait for when things align better, you'll put yourself in a higher probability scenario, which is all you can ask for, right? NVIDIA is trying to break this flag here. It actually just made a new high of the day. So we'll see if we get a nice push. If this flag fails, if it fails to go for a high of the day here and starts to kind of crack back down, I'll just take it off. I mean, it is making a new high of the day, or it just did. But ideally, I'd want to see it hold this 9 moving average here, which it has actually held the past like 15, 20 minutes. If it just kind of pops a high of the day and then dumps, and that's where you're going to get, that's the scenario, right? In trading breakouts that like just, it sucks, but also like that happens and you get these kind of false breaks that end up breaking back down. And it wouldn't surprise me because, things are choppy. The market's kind of actually just, SPY is rolling over from the highs that it was just at, half hour ago. So wouldn't surprise me. Volume on KNTE looks good. Let's take a peek. Oh yeah, that does. I mean, 230 was the low. The recent higher low that pulled back to was this 240. So yeah, I see what you mean by being late, but honestly, that still looks pretty good. That still looks pretty good, if you ask me. So you'd have to maybe build out, well, this thing can move. So, I mean, you can build out a scenario where maybe your risk reward profile is from here down would be like 25%. So you ideally want to get 50. So you would be looking for a move to 450 plus, ideally. And a risk of the lows, or risk, 240 as your low. Yeah, it's not the best of looks right there on that attempted break. We'll see if it's only, early in the 5 minute. Well, we're now late in that 5 minute candle, but we'll see. We'll see. That's the only thing that I'll be in now. So if it ends up breaking out and going for a really nice push, then I'll be green on the day on it. If it ends up breaking back below this 9, I'll be green on this trade, but I'll be red on the day slightly, because of Tesla earlier. Which there was something I could do about the Tesla situation, really. Made sense. In terms of the setup. Had some news in midday and the market all just kind of, everything just cratered for a minute and then bounced right back. What are you going to do? In the past, I'd get pissed about that stuff, but there's legitimately nothing you can do outside of cutting it off and not letting that become a monster. Because again, you can have scenarios, so there'll be days where you'll have, like, let me go back to TradingView, where like on that Tesla situation today, there'll be days where let's go to 5 minute. Where like this thing just craters for whatever news and it just keeps going. And if you don't have a stop, who knows what's going to happen? Like, how would I have known? How would anyone have known it was going to bounce right here and come back and technically be towards or closer to break even? Or if you bought the dip, you could have been up. No one knows. So you can't play off those assumptions. Because then, maybe it works 1 or 2 times or 3 times, or maybe it works half the time, but other half the time could blow you up so much more. And it's like, well, why did I do that? And that's been me. I've been there many, many times. Daily chart building a triangle and SPY. Yeah. And you hope we get some better action soon. But like we were kind of talking about though, the past like couple weeks, is of course things will heat up, when you least expect it. But we're at a point in general right now where it's like no one really kind of has this, oh, I need to buy and get in. Like no one's chomping at the bit to get in. Maybe, I don't know. Whatever, everyone has their own thoughts on that. Because if you ask people who are bearish, what they think in their heads is, who have this net bearish bias, what they think is that everyone's max long leverage and all this stuff. And I mean, I just, from the sentiment stuff that I've seen, I just can't see that being the case. And also, you're not seeing short squeezes left and right and crazy. Like, you're not getting the same type of stuff. You go back a year or two and you can see what that felt like. Go back to 2021. early that year. Like that's talking you want to talk max long and everyone's feeling really good. Like that's what it kind of feels like. And that was euphoria right there. I mean, we're not there right now. We're not even close to that right now. In terms of from a sentiment perspective, bullish, bearish, right? So that's why I just, that doesn't make sense. Then you can say, okay, well, everyone's bearish. Well, that's also not necessarily true because there's still bulls here. Market's been inching higher. So you got this kind of gridlock almost in a sense of who's going to win. No one, wants to budge. And we're kind of just over the past 6 months, like we've been building higher lows and kind of grinding higher. But each of those pushes to new highs is met by pullbacks. And then those, higher lows get built and then we go for a new high pullback. And that's kind of been the pattern. And right now we're struggling because we're not really making a new high on, if you go to SPY, we're not really making a new high on the, here's the daily chart. We have to break up over this 418 to 419 area. We break over that, then you can say that we're making a new high compared to this recent high back in February. So we're not there yet. So this could be the kind of the beginnings or the workings of maybe putting in a lower high, dare we say, or a double top if you want to call it that too, if this can't break. I'm just going to put a stop loss on this guy, on this NVIDIA here really quick, so we can go to trading views, charts, and not have to worry about it. Okay, stop loss is in. Okay, cool. I'm not a huge, the thing is, I have a love-hate with that because how many times have I put a stop loss on an option position, it wicks down, hits a stop, and then bounces right back, and then I'm looking at the chart like, yeah, I should have, given that candle, at least a few seconds to form, and then, but for protectionary purposes, 3x leverage ETNs, microsector FANG, interesting. That could be an interesting hedge. FNGD, yeah, that could be a good hedge. Now that you think about that. The thing about the hedge for me though is like, I'm not really thinking that right now. I actually sold my hedge. I'm just holding, I didn't deploy that money anywhere. I just sold a hedge and we'll hold on for now because what I would personally like to see, we don't have to get this, but what I'd personally like, I'm not like worried outside of a black swan event news that, we can't foresee coming, or that, who knows when it's going to, like, you can say to yourself, oh, like there's outside of news that we can't see coming. Fair enough. Well, at the same time, you'll have people who are like, well, how did you not see the banking news coming? Like, yeah, maybe like that's pressure with rates and we can see more of the bank issues arising later on. Yeah. But at the same time, like you don't know when you don't know when it's going to happen. You don't know when the next piece is going to come out. You have no idea. So personally, I'd like to see us extend up a bit more, make a new high on the S&P for the year, get a little more bullish bias going on, and then I would be a lot more comfortable with initiating a hedge that would be a decent size. Nothing insane, but a nice little hedge. So we'll see. This Thursday we'll get more data on this, and by Thursday, you're going to have CPI data already into the market to some degree, so that might affect this a little bit. But right now, after seeing this last week, I was just like, okay, I'm just going to take my hedge off because I wanted to lock in the gains on the hedge while I was up early on the position. And then once I'm on the side of a trade that most people are on, and hence, or right now the bearish side, as in 45% bearish, 31 neutral, and 24 bullish, it's just, pretty crowded over here. Not insane. We can go lower. This number could go higher. People start freaking out, market drops off. Yeah. But I just felt pretty good about locking that in. And then, because that's what a hedge is supposed to do. The hedge is supposed to hedge, and then it's not supposed to make you like necessarily be your portfolio. Like I'm not betting on the market to go down for the next 6 months. I don't know what's going to happen there. But if I take that nice 60% or 50% chunk of a hedge, make some money, and then hold that cash to then potentially be able to buy a dip or buy stuff that I want to buy later on at a lower price, if that's the opportunity that we get, then it did its job. So, because if you start, the lines get blurred really, really nicely. NVIDIA just stopped me out on that. So we stopped out. Yeah, there it goes, broke. That was a good stop, I guess, looking back. Stopped me at 315. Whatever. That was like a 15% gain on that contract, which looking at my net or my average, I like to look for 5 to 10% stop loss depending upon the contract and the day of the week, and then 10 plus percent take profit. So that was a take profit at 15. Yeah, I could have squeaked out 25 if I happened to sell at the peak, but my thought process here was, hey, if this thing wants to go for a pop and break these highs, which it did briefly, and then it had the false breakout there, this could give me 30, 40, 50% on the contracts if you get another nice push like you had on this breakout. So if that happens again, boom, then that makes a whole lot more sense to hold through something like that with at least maybe half or a piece of the position than just, freak out and say, oh my God, I'm green, I got to take profits right now, and without any sort of a strategic approach to it. Maybe it's going to hold these lows right here. We'll see. But that's the thought process. So today was, I think technically there was two reds on Tesla, one green on NVIDIA. So not bad, but you can take some patience to wait for a breakup or breakdown. Yeah, that's where I'm kind of, my head's at. So ideally we're not that far off from, the highs. So ideally we're closer to the highs than the lows, right? On this range that we're in. So ideally I would like to see SPY do this. SPY does this. And then if you see this shift towards majority bullish, then it's like, okay, hedge time, and at that point you can still be caught up in a potential squeeze out that might go on longer than you think, if that even happens. And then that's why you got to be careful on the hedges. Ideally I wouldn't go with an option one. Ideally I'd probably just go with 3x ETF, a 3x bearish ETF to hedge myself to the downside, and that would be it. So that is the plan going forward. I also apologize for last night. We were supposed to do a stream, which we usually do on Sundays, but I was busy with other stuff going on, so couldn't get that taken care of. We couldn't have that. I scheduled it, and then I was like, oh, shit, I'm not going to be home. So I was like, shit. In the background, we've got this new wonderful piece of furniture that's not going to actually stay there. That's going to get moved. The beanbag is going to go behind, like right where that is. And then there's like a light that we've got here. There's like another side table that I have next to my desk. That side table is going to go into the corner. The beanbag is going to go to the middle. That's the plan. But that thing took me I started building it at 7 o'clock on Saturday night, I think. And I didn't finish till midnight. So that was a beast to put together. So it was fun. Yeah, there it is. Look at that. So NVIDIA came down. Looking back, you could just use a 5-minute close too. That's another way to go about it. So that's kind of one of those wicks underneath that level. And it's like, if you had a stop loss, you're going to get taken out. And then now what it might just do is just go pop you to new highs on the day. But I'm fine missing that. It's all good. I'm going to get rid of this Webull because it's just taking up too much on the computer. KRE. Ooh, that would have been a good short. I was thinking, not that I was going to take the short, because it would have just been off of no technical thought process. It just would have been more of a hunch, which is why I didn't do it. But this morning we had a nice gap up on the regional banking ETF, and that fell off nice. This has been a good short the past couple weeks, but bounced back nicely to finish off last week and then just come back down. So it's just playing that reshort, that reload, breakout, gonna immediately revert. Yeah. And last week there were some good days though. I mean, my other mistake was I didn't take. I was sitting here and I saw this happen, and I didn't take it. It was AMD. I completely missed it, and I remember watching the contracts in front of my eyes. Actually, I was making something to eat at the time, but it was this setup right here. It was not a super clean break. It was a small little tiny flag, if you want to call it that, even a flag. The reason why I liked it was because it lined up with the highs that we had right here. That's why I liked it. And so I'm like, hey, if we can break over 91, what is that, 91, like 65. Yeah, that was the highs of Thursday. And there was that Microsoft news with AMD. And that could be a really nice spot for a breakout to the upside, because that was a previous resistance. And then we flagged. And now looking back, like that's kind of me being an idiot. Like say, hey, when you get a flag or a slight consolidation off of a nice push up into that area, that's a breakout that you want to take. The breakout occurred and really you didn't have any, like you broke out and you never looked back. This thing built higher lows in the 5-minute chart for like the next 30, 40 minutes. And you would have been up. I think those contracts that I was looking at went like 50% on this first push easily, maybe even more on that first push. And they went for more. And technically they're, still even higher now. So that was a mistake, because that could have been a one and done. Like that's, and the thing is though, those will come. If you're playing breakouts, like you're going to have to understand, like you'll get some of those, you'll get some of the false ones, but if you can stop yourself out on the false ones, because like, and again, and try to figure out why that, sometimes it is what it is. There'll be no real reasoning that you can kind of figure out. It just, the market is what it is. But maybe you can kind of start to say, okay, there's a higher probability of when we have better alignment with the overall market for these breakouts to occur. So when I see the setup, I might take this with heavier size when we have alignment and take it with lighter size when there's no alignment, because the numbers tell me that that's what works and that's what does better. So like you can kind of work your way in. But to me, if it doesn't work, okay, it's a 5-10% loss. And if it does, maybe my first take profit is at 10-15%, but the rest of my potential contracts ideally could be 20, 30, 40, 50, 60% sometimes, which will make up for and completely tip the scales to a much better risk reward profile over the course of trading that breakout setup, for weeks and months and eventually years, right? That's the whole idea behind it, at least for me. Yeah. Brent, no idea. PayPal we have not talked about yet. Let's take a look. PYPL. That's a nice consolidation there. Yeah, well, here's what we have, this gap. I drew this in a while back. We've got this nice gap up. Was that back in December into January, end of the year, into the beginning of this year? And we just came back and filled that really, really nicely. And we're establishing a really nice base there in like the mid to low 70s, which is beautiful. You are setting up, you got earnings coming up, which is the concern, right? Which is that today? Yeah, it's today. So we can wait for that to the after the close. If they drop it after the close, hopefully soon. Was there Palantir and PayPal after the close we were talking about? There's probably more too, but those are two that we'll probably watch now that I'm thinking about it. But yeah, you are on the cusp of a pretty nice breakout if this thing can get going. If this thing can break out over the 76 area, this is not perfect, because you did technically have the false breakout up here, and then you fell right back down, and that was before last earnings, which is kind of sketch, because when you get a move like that before the earnings, it kind of, I don't want to say it freaks me out, but it kind of gives me like makes me want to question, what's going on here. If this is just somebody setting up the buy the rumor, sell the news type of event or not. Now here, we've only moved like $2-3 off of the lows. So there's not much of a run up. It's really up only 3 days, really not even since the low. So pretty key spot. If that breaks, spots to watch will be up towards 79, 80, and then there's even a gap to fill up towards 84, 85, $85. Could be a nice little gap to fill here. That's like this right here off that earnings, or that was the pop in before earnings, and then it started to sell off before the earnings, and then it dumped after the earnings a little bit. So that's a spot that I'd be watching in terms of if I was looking for a target. If this thing does break, stop loss underneath 70, what is that low? 71, and then take profit could be up towards 85. Be a pretty nice risk reward profile, risking like $4 to $5 to make 10. It's pretty cool. Watch technical analysis videos from the CMT Association. Cool. Cool. Got into TRVN on Friday. Oh my, that's insane. Jeez. What sparked that on Friday? You're just looking at seeing that bottom or that base developing? Maybe there was some volume. I can't tell too well. Did you go back in time? Yeah, I mean, you can kind of tell that if you get rid of, or you can cancel out what happened today, you can kind of tell, like, look what was going on prior to today's action. I mean, after this earnings report back in March, you had about a month of just accumulation, it looked like, on the vault when it comes to volume. All these volume, even though it trended down, which it's very common that you see that, but that's just when you're getting volume increasing, but the stock is decreasing, you're seeing accumulation. And those are not, now it's a patience and waiting game, and it's tough because you got to at some point have kind of a risk, or, a level that you're willing to hold it down to. But my goodness, when that thing rips up 300%, it makes it all worth it, right? If you're in there at like sub 75-cent average, like, holy shit. I've had a fair share of those over the years, but nothing like that, at least recently. Actually, no, maybe you had one or two. December, January, there was one or two that were like that. We had like, I think, a 600%er and a 300%. I wasn't small, but there were some nice ones at that time of year. But yeah, that's awesome. That's when you're like, you know what? Swing trading small caps is the best thing ever. And then when you then you have like a few more that just like you happen to hold through like this, and you're like, swing trading small caps is the worst thing ever. Then you get caught in an offering, and then, oh my God. But ideally, that accumulation was, I don't want to say it was clear, but there was some, when you look at that shorter term chart, there was some nice volume, there was some better volume coming in really ever since that earnings, like this whole period. Likes breakout trading compared. Well, here's the thing when it comes to that. That's kind of, and I was not someone, I don't like that from an investing approach or from like a hedging approach. I don't like the breakouts. I really don't. But from a trading approach, I like it a lot more for that exact reason, because they're more powerful and you get a better bang for your buck. That's a perfect way to put it, because you're going to get it or you're not. It's happening now. Like, generally speaking, if you time it up, and of course, timing is never perfect, right? But for example, here's NVIDIA, right? You had this high from a few days back on May 1st, and then that was that blue line, right? We came up to that level, and what we did was we pretty much rejected, and then we broke out. And that was an immediate big move. It went from 290.60 all the way to 291.95, almost 292, or about 292 in about, 10 minutes. So that right there allows you to, well, you can chart things out ahead of time, plan your stuff, and then you wait. You wait for stuff to happen. If it happens, great. If it doesn't happen, it doesn't happen. No worries. Who cares? It has to align. And then you can set alerts and, set alerts just shy of the breakout point, so you can kind of come back to things a little before the breakout and get a better sense of it. What do you think? And maybe set up your trade if you want to trade it. But you're going to know it works or it doesn't work. If you're playing, like, let's say you think, okay, I'm going to short NVIDIA right now because I think we're going to pull back because we're at resistance. That's fine. We might actually be there, but it might be this choppy consolidation, and then now you're in this trade for 10, 20, 30, 40, 50 minutes, an hour, 2 hours, and then it could span out to days, weeks, months if you're swing trading, right? Same thing. Because you're going against almost the trend. Now, you could wait for signals and stuff, sure, for maybe reversal signs, and there's things that, indicators, or there could be things that you look for, candlestick patterns that could give you kind of signals, and those things work, don't get me wrong. Not all the time. I think nothing's 100% by any means, but you still have to understand, if you are looking to short this thing because you think we're at resistance, let's just say that it looked really good from a, double top or whatever perspective, you are still shorting against the overall trend on this thing that was up, right? So the mean reversion is good in a sense of, like, you might get a better entry if you do time that higher, that relative higher, relative low, and it does start to roll over. So when you time it, your risk reward is usually awesome because you're like, okay, well, it's either going to, roll over here or bounce here, or it's not. But I've found many times that if you catch it at those weird times, you could be in the trade for longer. And next thing you know, you kind of find yourself fluttering around, and then you're getting decay on the options. That's where futures might make more sense, but you're getting decay on the options, and then you're kind of waiting and watching for longer than you may need to be, because if you're playing the breaks of key levels with setups that, stand behind it, and that you've kind of tracked through some sort of back testing, or at least you're kind of watching, or at least you've seen, if you've been around long enough, you kind of know, you kind of have a feel like, oh, that looks like it's going to go higher, or that looks like it's going to go lower once this breaks. Now, building a more systematic approach behind that is important, but you kind of have that understanding. And then when those things happen and those moves occur, they're pretty fast. And so it's a nice bang for your buck. I agree. And that's why from a trader's mindset, I much prefer that, because I'm either right or I'm wrong pretty quick. And then it could allow you to not have to sit and wait and watch and wait and watch. When you do get the trend days, like for example, if I had taken the AMD trade earlier off of that small little flag here, like midday, like right at this level, that was the highs of Thursday. If I had taken that, technically speaking, I could still be in. Or even if I, had stopped myself out, at some point up in here when it started to pull back a little bit, because you don't know when it's going to pull back and when it's going to just kind of build a higher low, right? You could, have locked in the majority of the gains into that, 20, 30, 40, 50% move in the contracts, which is probably what I would have done, because I know I risk 5 to 10% ideally. So I'm like, okay, if I'm up 25, I might lock most of this in, or lock a good chunk of this in. Now I'm up 30, I'm up 40. I'm going to lock a little more in. And now I can hold that last contract or 2 contracts or 5, whatever the number is, for potentially, this thing to kind of keep grinding. And then if I want to walk away, I put a trailing stop loss, or I can put an alert on there. If it comes back below this level, let me know. I'll come back, take a look at the charts. And if that's a breakdown of the trend, because we might get a trend day, if it's a breakdown of the trend, I'll get out. It's no longer kind of, doing what I'd want to see it do for a further continuation. Okay, fine. And those are the ones that'll be the longer trades. Like those could be ones that you're in for hours. If you're just talking about day trades, you could be in those for hours, but you don't know, right? You have no idea going into it. And so you can find yourself, and that's me too. I mean, I'm very impatient. We're like, you know what? We're up 30% on this. I'm just going to take it all. Meanwhile, that contract might go 100% by the end of the day, or, by the next 2 hours. And I would have had all those gains that I missed out on because I was impatient just to take my 30%, which is fine. Don't get me wrong, because if I'm risking 10, and I'm getting 30 here, I got to be right, less than half of the time, and I'm still green. I don't care. That's fine. Those numbers work out nice. But there's more, meat on the bone that I missed out on because I was impatient. And I was like, I'm just going to take it. Meanwhile, there's nothing telling me that we're breaking trend. There's nothing telling me this momentum is slowing down. It's just, I see the number and I'm like, holy shit, I'm taking it. Which, it's up to you if that matters or not in your style and strategy. Here's NVIDIA, by the way. Just popped a new high of the day, I think, briefly. Yeah, so ended up holding this low right here, which is fine. And then but it's still choppy, so it's really I found I had just done breakout trades. It'd be a lot more worth it. Oh yeah, especially on 0 days. Oh my gosh. On 0 days, you can kill it. XPI is down a little bit today. I had a good week last week. Let me see what XLE energy. How's energy doing today? Let's check. It's selling off. Let's see. Did oil drop? No, oil's still up 2%. So energy just kind of fell off, which is funny. The ETF. Gold and silver. Gold's up 0.3. Silver's down like 0.25, 0.3. So they're not doing too much. Natural gas is up 5% today. Pretty much bouncing off the same low that it has. So maybe it's respecting some technicals now. technically built a little bit of a higher low, or at least tried to here last Friday. So let's see what it wants to do. If it gets back above 250, it would be a good look for bulls. If not, under 210 doesn't look great on natural gas. Yeah, I mean, that's how a lot of people do when it comes to these massive trades that you'll see people, calling out and whatever, posting about. It's really, a lot of that is kind of predicated on either absolutely nailing a high or a low and having a massive reversal at that time, which is a lot more rare than you think, or realizing some sort of key level and getting a break up or down above or below that level and getting a decent sized move in a pretty short period of time where you're getting that better bang for your buck on the option contracts and whatever, because you don't have to be, you're not in that thing for days, weeks, and months. You're kind of hitting it, getting the move, and then getting out. So that's what I like about the breaks. So, but then again, in the grand scheme of the overall context of the market, what do we see? Right? Are we in a market that's doing this, which would make breakouts to the upside more viable? Or are we doing this, which would make breakouts to the downside, more highly probable on intraday patterns? No, we're not. So we're kind of, not in the best environment for it, which is fine. It'll still work, don't get me wrong, here and there, but not as well as if we were trending in a direction clearly on the bigger picture timeframes. DXY is at 101. You know what I decided to do? So I had the Webull IRA small account challenge that was going on, and I did it. I got it up to a nice number, and then not unraveled, but pretty much blew the majority of the gains in that thing, and it bled right back down into the low hundreds from $100 or whatever I had done or whatever it was coming from. So I put it into I think it's UDN, because I'm not trading that account right now because I was I want to get a better feel for trading one strategy. Hence, we were talking breakouts, trading the breakout strategy, but getting good at it before I'm comfortable starting to play with super, super small account size, where it's one contract here, or you got to go way out the money or something. And that's kind of not a make or break, but you get a couple of those in a row that are duds, or you're in an environment right now that's not as highly probable for breakouts. Well, you're just asking for trouble, because the small accounts, you don't have a lot of room for error. You can't really miss 4 in a row. You kind of got to get some traction and build it up a little bit. So now you can have some room to scale. You have some room to buy 2 contracts. You have some room to then hold stuff a little bit, maybe be a little more lenient on, your take profits and your stops and stuff, which gives you a little more cushioning. But I put the money in that account into this for now, just as the bearish dollar ETF. I'll get out of it. It's not a very volatile ETF. I mean, this move right here from March to now is up 5%. Not a very volatile ETF. This goes up when the dollar weakens. And so I'm looking at the dollar and it's down towards support right now. I think that's cool, but this just has the look to me we're about to break down. So it's kind of a speculation / almost a hedge in a cheap way to do it, and to not for it to matter that much. So I'm sitting here saying, how else would I be able to capitalize? Yeah, you can go with the dollar shorts and stuff, but those things are just not super volatile. So it's not you can go with gold and silver, which I already have exposure to silver. So I feel like I'm covered in that front. Yeah. Once we trend in a good direction, breakouts we probably. Oh yeah, and the thing is, when that happens too, the you don't need a little bit of sizing up and boom. I mean, you can destroy in a short period of time. So here's an example on QQQ. We're getting pretty close to a breakout. This thing might be breaking out as we speak right now, up over this level, which might send it up into here. And of course, you got CPI and PPI this week, so we'll see what happens there. But you have the look of this thing is kind of just nicely pushing. Maybe it wants to do something like this, and then that in this environment, your tech stocks will be looking pretty juicy because a lot of them are also up near their highs. You know, Apple. Let's see. Let's just go through some of those. Tesla's not there. Let's look at Apple. Apple, yeah, right up near highs. Very close to highs from August of last year on Apple, by the way. Microsoft, right near its highs right now. NVIDIA just made a new high on the year today. AMD, big move off that higher low at 81. Pretty close to its high right there at around 102.50. Meta, not that far off its high. Amazon, I think it's a little, Amazon not that far off that's high either. Google, no, yeah, Google's not that far off that's it's high as well. I mean, these are some good tech stocks to keep an eye on, a close eye on. You know, if we are going to break out on QQQ, I mean, these could be some nice moves, which could provide some really nice intraday moves of, you know, a few percent on some of them. So that's the thing. And in the option world, right, that could be crazy gains. So it's about the timing. It's about being patient, waiting for the right time, and acting. But that's why right now it's not the best, because again, like we're not doing like much. And so if you want to be contrarian on some of this stuff, and you say, okay, well, I want to be contrarian because I think that, or I want to hedge myself for when, you know, tech pulls back, is, you know, a consolidation the best time to do that? I don't know. If you're going to do that, if we're in consolidation, which we are right now, but we are in a bigger picture uptrend, and you're betting on the downside, you're playing a guessing game, because technically speaking, like we are just consolidating after trending higher. There's not, unless you are assuming a top is put in, or at least a short-term top is put in, right? How do you know we're going to roll over, right? So to me, it's not the best time to hedge. You want to be more so hedging as we're in these extensions up and down, and that's when you want to hedge. Not really in the consolidations after or while we're trending, or as we're trending, right? Because you don't know when that trend's going to end. So at a minimum, we get into a really nice extension. You can kind of hedge against that, and then you can take some of the hedge off, if not take the whole hedge off, as it falls back into consolidation. Like if we were to, you know, do this, and then we went like this for a while, who knows when you're going to get the hedge on? But if you were to hedge, you know, somewhere up in here, maybe you'd be able to take some of it off into that consolidation. That would have been green, you know, maybe. Versus just consolidating inside of, or hedging inside of this consolidation, but yet all we see is higher lows, and you go with a short, and then what do? You know, we could just do this. Consolidate. You know, who knows how long it can extend. And the same exact thing on the downside. I don't know. We probably have to we had to dive down a decent amount for me to start going with a long hedge, if that makes any sense. Like we, you know, if we start getting really oversold, then it makes sense sometimes to maybe pick up a leveraged ETF, a 3x bullish ETF for a bounce. But those are, for me right now, you probably have to dump a lot for me to even consider that as an idea. So just because we're really much closer to relative highs than lows right now. Palantir's earnings beat could have a third. Yeah, I mean, I wouldn't be surprised. Let's look at the moves on it. So market just closed right now. Palantir and PayPal have earnings, I believe, after the close. Those are like some of the ones we were just talking about earlier. There's other ones out there too, but so Palantir's last earnings thing went from 750 within a couple of days. It was at 10 plus. So yeah, it could do well. It could do very well. So let's see what we get on it. The market is now closed. On the day, what do you end up having? You've got a day where SPY was up 0.4%, QQQ was up 0.26%, IWM was down 0.23%, and then the Dow DIA was down 0.15%. So like, talk about a shitty day. Like, not much really went down. Gotta export my Webull order data to my phone or to my email. Not bad. The NVIDIA could have been a better trade, but it is what it is. Let's see if PayPal's moving at all. Palantir, it's up 1% here, but not much volume yet. PayPal, not yet. I haven't seen it come out yet either. It's always a fun time once you get like the bulk of the big earnings companies out of the way, and then like you kind of forget about that, and you're like, earnings is over. But then it's like, no, there's a lot of companies that still have earnings, and that the next like couple weeks are slowly kind of dropping them. At least I was positive. Yeah, I guess so. Guess so. Still waiting. We'll wait a little bit, and we'll see what we get. Ten-year was down or was up a little bit today. Yeah, 10-year was up. Bitcoin was down 2.5% on the day. Nothing crazy though. Nothing like. But again, that's just kind of how it is. Like you'll go through these periods, which is good because these are good times to learn and to kind of soak it up, I think, and to kind of feel what it feels like when we're just chopping around, consolidating a little bit, and then when you have different environments, you're just gonna get a good feel for different environments. It's a good thing. Lucid just had earnings. Remember Lucid Motors? Lucid Group, I guess what they're called. They came in with Q1 revenue at 149 million, and the estimate was 197 million. That seems like that's horrid. They plan to manufacture 10,000 vehicles in 2023. They delivered 1,406 vehicles, and the estimate was 1,835. That's pretty bad. Ended the quarter with about 4.1 in total liquidity. I feel like though those numbers sound horrid, but like they've had some bad earnings in the past. I believe they've had some bad experience in the past, and I'm not super surprised. I don't think people are super surprised that their earnings is not great here. So I don't know if it is going to react in a super, super negative way. It's down 6% in the after hours, but 6% on this thing. We've seen stocks move more than that. So, poor Lucid. I think the cars look cool. I do, but I think they had super, super high expectations. But about 2 years ago, or whenever it was, a year ago, 2 years ago, when like the whole EV craze is going on, and they kind of played off of a lot of that, played into that hype. That the stock price played into that hype, and then you're kind of getting that slow bleed ever since, right? It's pretty nasty on this thing. Remember this thing was hit up to 60 plus 2 times. 2 times it got to 60 plus. Imagine having been able to short that. Imagine having caught some of this short up here, like somewhere up here in like the 40 plus range. Oh my God. It's insane. So what I'm excited for, like, to be honest, if we get some really nice moves, Palantir's ripping here into the close or after hours. I'll pull up the earnings here in a second once I can find them. But yeah, like I'm excited for if we get some explosive squeezes. I would love to see some of those like inverse 1.5 leverage ETFs on some of the big name techs like Nvidia and stuff. Like, of course, shorting into the extension is risk. Don't get me wrong, but as hedges and stuff, like if you catch some of those moves, it could be pretty cool. So Palantir in the after hours, we're going to a 1 hour chart. It's up to 850s. The earnings is out, I believe. Haven't found a confirmed source though yet. Is this like even a legitimate company? Stock Titan. I have no idea if this is even like a legit site though. So take it with a grain of salt. Profitable again this quarter. We anticipate that will remain profitable each quarter without the end of the year. Co-founder, chief CEO of Palantir, wrote in their letter to shareholders. GAAP income 17 million. Adjusted EPS 0.05. Total revenue grew 18% year over year. US revenue grew 23% year over year. Okay. Revenue was $525,000. No, 525 million, sorry. 520, I was like, what the fuck? 525 million, which, to be honest, what's their market cap? Market cap on Palantir is 16.37 billion. I guess people have, well, people, we've been saying they got high hopes for Palantir, which, yeah, I mean, it's a big move, though. Up 11-12% now in the after hours on Palantir. PayPal? No, not yet. I don't see PayPal yet. Might wait, half hour, which would be kind of dumb, but yeah. So Palantir's revenue comes in at 525 million. The estimate was 506 million. EPS comes in at 5 cents, and the estimate 3.8 cents. Adjusted EBITDA 131 million versus 99.3 million estimate. Yeah, so they pretty much they adjusted their forecast slightly higher on revenue for full year, and quarter two down from the estimate by a little bit on Palantir. But it's up 13% now, so that's a nice move. Lucid cars are too high end. Yeah, I mean, that's the thing about the Lucid cars, is that they are high end, so they're expensive. They're not cheap, which I guess in a sense of where the economy is currently compared to maybe where it was, things are slowing down with tightening and rates and all that stuff. And, people can't afford that maybe as much as they could have 2 years ago when rates were cheaper. Maybe people had higher paying jobs. That's the biggest thing. I don't know what you guys are experiencing in your like day to day or from your lives, but from my experience, and maybe this is just more of a local thing to Austin, Texas, which was a decent sized boom city, post pandemic or around pandemic into like the year or two after, with everyone moving here and stuff. But there's a lot, it's like the reins are being pulled back in a big way. You have a lot of companies restructuring, a lot of people getting laid off. Now, many of them are actually able to find additional jobs and find additional work. Some maybe not as easy as others now, and some maybe finding lower paying work now. And even where my girlfriend works, and they're laying they just laid a lot of people off, a lot. So from what I am seeing here, it's not the same data, and that's just kind of my experience, right? Then your, new low on unemployment rate, and these jobs are super strong. I think that maybe the job numbers are coming in super strong because maybe there's there's maybe delays in this whole thing, and also because people are getting those cheaper, lower paying jobs after they're being laid off from their higher paying job, right? And so if you were to be looking, right, companies are not looking to backfill positions where someone leaves or someone's fired and whatnot. They're not backfilling as fast, as aggressively, or maybe not even at all. So that's what I am seeing in my own experiences. I don't know about what everyone else is experiencing and where, but it's not the same booming economy that it was, when rates were super, super low just, 2 years ago. So the high-end vehicle, the high-end car is not going to appeal. Now, maybe Lucid is a stock that you want to be buying into if you believe in them. I have no idea. I haven't followed them very close. A stock you might want to be looking at and maybe buying into this recession or semi or whatever you want to call it, whatever we have, pull back in the economy, even if it is not a total recession in the next, couple of years. Maybe it's something to pick up, because then the things get better, then they do better. I don't know. But that it presents opportunity in the grand scheme. Again, if if the company can put it together. If they can't, then and there's too much competition and then Lucid becomes irrelevant, then it doesn't matter. So you got to have a feel for that if you're going to invest in them, I would think. Office Depot cut my hours again for budget cuts. Oh, shoot. Yeah, it's not super surprising, right? But what's also interesting is I was even seeing or hearing about companies. Now, everyone does it differently. A lot of companies do it differently, where sometimes a better bang for your buck would be to fire or let go of those who've been there for a longer time, potentially, depending upon the rules and regulations of companies and stuff, who've been there for longer, who would now request higher pay or who are used to higher pay. You let those people go because that's going to save you the most money. And then you have cheaper work or new hires come in that are cheaper that, help kind of diminish and lower costs. Because you could also think about it as in you could fire the people who maybe are less necessary or people who are like the cheaper workers, but you got to fire a lot of them to do make the same kind of savings as firing someone who's higher up the ranks at a company. So you kind of have that, dynamic going back and forth as well, which is interesting. I feel like everyone has their own thought and approach behind it. Also, this whole talk about the debt ceiling and all that stuff going on, all I see is articles about it. Now, the market doesn't seem to care right now. If they can't get it done, I think the market's going to care in a big way. So that's another concern about, if we were to break to the upside here, I don't know, how soon that could happen and whatnot. But if it were to do that, and this debt ceiling situation is not resolved, then that's a big risk of downside, which would make sense to potentially hedge. But hey, if it does get resolved, then what happens? Maybe that's not a good solution in the long run, but in the short term, how does the market react to that? It immediately eliminates a short-term negative catalyst for the market, maybe, and all of a sudden it could rip higher. So you got to take that into account too, both sides of that. If they can't get it done, that's probably a downside risk, we assume. If they can get it done, well, is that an upside risk? Are we at risk of market loving that news and rallying? Even though you could also look at it as a lose-lose, because if they do get it done, that's probably not a good thing in the long run for the economy and country and whatever. So I don't know. It's interesting. That's a whole other piece that, you're seeing a lot of talk about, at least on financial social media and financial news outlets these days. But it seems like they've made absolutely no progress because the great members of our government can't, do shit. And, what are you gonna do? Nothing like what do we know? What do I know? I don't know shit about that stuff. But all we know is that you've got two sides that are like this. It's politics, and it is what it is. And we can never come to any agreements, which is just great, fantastic. So the VIX is around 17 right now, which is not, much. It did dip down to 1550s, so it was down about $1.50 lower. But it tried to get back over 20. The VIX needs to get back over 20 if you want some more volatile action, and it's just seemingly struggling to do so as of now. Yeah, we're looking at Palantir a few minutes ago. It is ripping nicely. Let's see where it's at now. It's up 19%, man. Jeez, 923. Look at that. Let's go to that 1 hour chart again. So the highs of earlier this year, well, not the highs, earlier or back in mid-April were around 903, $9, give or take. So it broke that nicely. They laid me off. I wouldn't mind finding something else, but I don't think they want to do that. Yeah, it's just kind of how it seems like you, and I think a lot of companies just handle it differently. It's like, how do you handle this? What do you think we should do? And everyone's got a different perspective as to what's going to save the most money. And sometimes you take a gamble or you take a little risk as well. On that front. But With that said, I don't think PayPal is coming out. Well, there it is. It must be out now. Must be out. Let's see if I can find it. PayPal Q1 net revenue, $7.04 billion. Estimate was $6.98. Adjusted EPS, 1.1. So it looks like PayPal beat on revenue and EPS off the top, I believe. Looking to see if I can confirm that, though. Yeah. So $7.04 billion in revenue versus an estimate of $6.98 billion, and then EPS was 1.17, and the estimate was 1.10. And it's down now 2%. So PayPal popped and then dropped. Try to break out of that downtrend. We were talking about that downtrend on PayPal earlier, you know. Big picture on PayPal, you got a really big, juicy potential downtrend here to break out of. But so far, it looks like it tested that level again today, and as of now, is rejecting off of that downtrend line. So with that said, I'm going to wrap things up. I apologize for yesterday. I was supposed to do the live stream last night, but I was not able to get back home in time. This week, I'm going to be like, the next couple weeks are going to be kind of weird. I'll be around during the week. We'll do some lives during the week, but the weekends I will not have live streams on Sundays because I will not be around on both. So, and then Friday I'll be away this week, and then next week it's like Monday. Whatever. That said, that's not a big deal. But we'll hang out for some streams. I'll be here for a CPI and PPI and stuff. Just Friday we're heading out for a couple of days for a little hiking / camping in the desert. That's the plan. But thanks so much for tuning on in. If you guys are new, hit that thumbs up. Consider subscribing if you want to be alerted for more of these streams. And I will see you in the next one. Peace out. Enjoy the rest.